All right, guys, we have another Sunday video. This time we have Chris and Stan, and this is for the 18th of March. Crazy week last week. I feel like momentum maybe slowed a little bit. There was definitely plenty of opportunities, but the liquidity I feel like wasn't the same as the last couple of weeks. But I feel like we had some really big opportunities, though. And the biggest one for me was one of the same setups that we've seen. We've been talking about sort of SMCI and then NVIDIA, where these, the perpetual squeezes leading into some sort of gap up parabolic move. And we had exactly that on SOUN. So for me, that was the trade of the week. That was the big one. But what about you guys? What did you guys see? Chris, start with you. What did you see this week, whether or not you took the trade or just, you feel like it was probably the best trade of the week?
Yeah, so I was a little bit hands off this week. I didn't take too many trades. I think that there's like a little bit of a shift in the market coming up. So usually when that happens, I just kind of scale back on the amount of trades that I take. But I think that two trades that I were in my wheelhouse, but I didn't end up trading this week. One was Tesla. And we've talked about the relative weakness of Tesla this year and the relationship that it has with rising interest rates. And so even though interest rates have technically been the same, bond yields, which is like a proxy for interest rates, those have come back up a lot. And I think we've seen, we had some inflation data this week that ticked that number back up. So as interest rates or as bond yields are rising, that puts extra pressure on Tesla. So Tesla has a lot of things not going in its favor at the moment. And when you have a new variable like that, that really made for a very clean downtrend, just day after day after day of failed follow through and just pressure. So I would say Tesla was definitely the best, puts option, trade that was you could size into and that was in my wheelhouse, but I didn't end up trading it. But that was an exceptional one.
Nice. And yeah, I remember you've been talking to maybe like, I don't know, a month now, maybe a month and a half, but where you showed the chart, there's one going this way, one going that way. So very, very good idea the last couple of weeks on that one. What about you, Stan? What did you, either your best trade, best opportunity of the week, or maybe one that you didn't trade that you feel like was the one that got away?
Yeah, I mean, Nate, absolutely. I'm with you on the SOUN idea there on Thursday. Unfortunately, I wasn't around the desk, early in the morning to catch that one. It reminded me much like Mara back in January, I think it was.
Yep.
Wasn't around for it either. But SOUN, I did trade it a little bit after hours on Wednesday when we got that pop over tens, and then truly that's probably the best opportunity that I saw out there this past week, as far as the volume, the liquidity, the range, exactly what we expected. We truly received it. I just unfortunately didn't get around to that one. Another one that I did trade was GXAI.
Yep.
And that one actually was a very clean trader. I mean, you had similar setups between you had GXAI, you had HOLO that gave a nice clear out, and then the backside. So those are the couple that I did trade. Relatively headache free once the backside came in, and it's just standard stuff that we go through every week, failed follow through setup, and then continue with the heaviness from that point forward.
Yeah, I agree. GXAI, I was there in the morning, noticed that it was starting to hold, and then I started back in there on the next push. It held, so I stopped, but that gave me that ability to nail that backside move, which I think ended up being a $7 fade or so. But I would agree with you. It's been really, really clean. If the only reason you're really losing in this market is if you're stubborn. There's been such clean, blowout move, come back, retest, fails, and then that's it. So the ones that have been squeezing are, you've got to be ignoring quite a bit, which, is good and bad, because if you're losing on them, then you're being stubborn. But I always like it when it's clean like that, because as long as you have good risk management, the losses are really, not that big compared to what the market's been providing lately. Like the BMR breakouts and, any of these other longs, they're just such fast 30 to 50% moves. But, I always sell them too early anyway. Chris, we had inflation data this week, and do you have any thoughts there? And also, what do we need to be aware of this week, moving forward?
Yeah, we had a couple of key pieces of data for inflation, like CPI and some others. And basically what we saw is that they started to tick back up a little bit. It's not so much that they're like ramping the other way super hard, but the progress of, the inflation trending down, you can see that that's it's stalling. And so, sometimes they stall first and then they'll start to tick back up. And so that's definitely something to be aware of. And we have the Fed meeting on the upcoming Wednesday. So they'll be able to give some comments of basically whether they're worried about that, if that's going to prevent them from cutting rates this year, or if they, come out pretty hawkish and say that, if inflation starts to tick back up, we'll have no problem doing another hike. And the market is not expecting that at all. And I'm not expecting that, but something to be aware of. But I think that just the higher for longer narrative is going to be in place, and just seeing, what sectors that hits. And so we talked a little bit about how something like that can have a direct impact on Tesla or some companies that are more interest rate sensitive, and companies that have other bad things going on at the same time. So, you don't just want to rely on one indicator, but especially for the type of trading that I do, which is like confluence trading, you look for a lot of different things going in the same direction to give you an edge. And then we also saw, commodities really start to rally over the last couple of weeks. And so you have things like copper that are breaking out for the first time in a long time. So, you have oil ticking up, you have copper ticking up, and those are components of inflation. So I think that the Fed is going to be a key thing to watch this week. And I'll give everyone like a life hack. Everyone is, when the Fed meetings happen, everyone's trying to decipher, like, what are they saying? What do they mean by this? And like a really simple hack is just to look at 2-year bond yields. And those are the most sensitive bond yields to reflect basically what the Fed is going to do or what they decide to do. And so if 2-year bond yields start to shoot up as they're talking, that's, it's a hawkish tone. And if they start to go down, it's basically signaling what is the Fed going to do. And those bond traders are going to be a lot faster and a lot smarter than me, and a lot of people that are trying to decipher what the Fed's saying. So definitely watch 2-year bond yields as the Fed is talking and the meeting after.
Awesome. Good to know. Stan, I know you and I both traded VERB. VERB was a pretty wild one. And this is one of those, and I've talked about this before, where, I absolutely love Delusion Tracker. It's like the Cliff Notes to, literally every single stock that's out there. But, it's when enough people are watching the same thing and they see all those red things like offering risk, red, if you're only relying on that, then a lot of times you make the wrong decisions. Maybe you ignore the price action, maybe you ignore the volume because you have high confidence that, they need to raise. So now instead of maybe seeing what the trade's doing and watching the volume and realizing that, the trend's actually holding, you're like, nah, they need money. This is, a high probability raise. I'm going to just stick around. And I feel like that's what a lot of people did. I think a lot of people were expecting a raise pre-market. They just look at that real quick. They don't really dig into the filings. I always like to use Delusion Tracker as sort of did I get it right? Because I try to do it myself first a lot of times. Or if I do take a quick look, then I try to investigate a little bit more and see if, I can learn anything from sort of what happened, reverse engineer and things like that. But anytime these volume, plays, they just keep on churning and churning and churning. I always like to just be a little bit cautious, especially if Delusion Tracker's got all 4 red, because, I just feel like a lot of people are going to be on the wrong side. And that's exactly what we had here. It was very, very clean blowout move. And I think, if you go back through the chat logs, how many times did we have a stuff move, right? And it was just about to break out, stuff slams down. And then about to break out, stuff slams down. But what happened? Every single time it slammed down, it started to hold at that 38 level. And one of the things that obviously we always talk about is whatever happens after the stuff is all that matters, right? We need it to stay heavy. So we had a really nice breakout, started to really churn. And, I just wanted to kind of pull up this chart just to see just how clean it actually was. And if you're going back, this is the information you have at the time, and you can see a stuff move right here off of 45, slams down, starts to churn, soak at 38. again slams down, but it cannot break and stay heavy at that 38. Sure, maybe it hits 37, 36, but it immediately goes back up to 38. We end up getting back up over those levels. And from that point forward, now 45 starts to become the base. So we knew that 45 was sort of that clear out level, but now 45, which was resistance, becomes support. And from that point forward, obviously shorts are trapped. And so for the late day move, which I fumbled in a big way, I had this nice breakout move. And then over here, I had said 68 is sort of that line in the sand, that sentiment shift. And, ideally, this is the part that cracks and it flushes, and potentially it could hold on and come back later on, but obviously it stayed heavy. But I felt like it was a pretty clean move, pretty friendly trader. And I know you had some thoughts potentially for the week ahead, but also maybe some feedback from Friday as well.
Yeah, that's right, Nate. VERB, VERB, it definitely had the look on Friday. It had that potential of maybe turning into something, much bigger, similar to what you said. I think a lot of people looked at dilution tracker and now their thesis is based on, is it 3 out of 4 red or is it 2 out of 4, not really looking at the contextual aspect behind why would one of these particular parameters be red. So missing that context, you get a lot of inventory stuck on the wrong side very, very early on. And what that allows you to do is have that wrong inventory essentially pick up the slack and do most of the work for you throughout the day until you reach that exhaustion level, until that supply comes in, and then it sort of turns the tides from that point forward. So yeah, I think VERB had a great potential if that 68 70s level firmed up and maybe went back into the highs there on 90s and maybe $1. But ultimately, throughout the day, once we failed that level, you can see it in the tape. It was just really heavy. Every time it tried to come up for air, the sellers were there. And then they did an offering, I believe, after hours for, 3.7 or 3.8 million shares, whatever it is, which in the grand scheme of things, that's nothing. Yeah. Right. We've just rotated over 500 million shares, and here we are. 4 million isn't really going to fix anything for you one way or another. So for the coming week, this is definitely going to be a top watch for me to see if we hold a particular level and then go a little bit higher, push, squeeze out, and then either capture some of the dips for the long side, or ideally, wait for that exhaustion move and then look to get in there after the follow through momentum setup. But overall, a lot of volume turned. This is how they create the market. It's, you have that day one pop, turn volume, and now this becomes a ticker that will probably linger for a little longer before fading off back to whatever it came from.
Agree with you right there. And I would say we haven't had a volume kind of ticker in this price range since PHUN. And you can go back to see PHUN and just how long that stuck around. And nobody cared that they raised, and there's 500 million traded and you're only doing, Fund did a whole lot more. But VERB obviously probably still needs to raise some more multiple times, and maybe they do a couple small ones. But in a situation like this, if people were expecting a bigger one, then yeah, we could push 45, 50, 60 again, and then they do it again and again. And I feel like in this price range is also, no offense to those traders because they're crushing it when they hold, but I feel like this is the kind of the price range and the volume where you can't convince somebody that, it's a bad company to hold. It's you're not going to talk them out of they're not selling their shares no matter what you say. So because of that, we do build the market, like you said, and they linger a lot longer than you think. So, yeah. A situation like that, don't force it. When there's 500 million shares on the tape, react to that big move. It flushes, move on, because it is going to hang on way more than you think. So that said, speaking of small caps, I know you had a little bit of color to add on your thoughts for the week, and my own personal thoughts were, there's still plenty, SOUN and all these great big trades, but it did feel like things were a little bit thinner this week, and maybe you didn't get let out as many times as you had in prior weeks. What are your thoughts on small caps and how they've been reacting this week and for the week ahead?
Yeah. So, as you mentioned, this past week, we did have a little bit less of liquidity out there. And you can see that with a lot of these intraday moves that we've had where it's sort of a pop and drop type of market where, you have that rush of liquidity come in, that big volume comes in, it does whatever it does, it exhausts, and then it just sells off for the rest of the day. I forget which day it was, but there was a ticker ALCE. That's one that I traded actually, and that's something that's kind of what it did during the day. It opened up, it turned a little bit, and then midday it just exhausted, and then it came right back down. Yep, right there on this. I think it was the 12th. So there's a lot of that going on right now in small caps, to where if you're quick on the trigger, if you don't marry a bias, you can take advantage of the opportunities in either direction. If you're early enough, ALCE, I traded long on that day, and then sold into the pop, or if you just wait for the setup to exhaust and then catch the backside, that's also an opportunity there as well. So in terms of the overall small caps market, I think for the coming week, for me, definitely would be watching sizes and really look for these A+ opportunities, either a midday clear out like we've seen this past week, or something like VERB, VERB, where it turns the volume, it provides for the opportunity, it extends, it gaps up, or something like that.
Perfect. And Chris, you are noticing a potential theme starting up, seeing some breakout, some volume. We might have some sort of anchor type setting up. What are you thinking?
Yeah. So as we've seen a couple of like the inflation metrics come back, we've also seen some commodities start to break out again, and copper is a good example of that. And so copper is, it's been in a range for a long time, but once it starts to break out and it trends cleanly for a while, with commodity moves, for the most part, when a trend or a theme happens, it usually plays out for a while, as long as the key variables are in place. If you have like supply demand issues in the copper market, those are not things that change week to week. They're things that require, months of higher prices to really bring new supply on demand, and that can, eventually lower the price. But while we have copper breaking out, something that I'm watching is FCX. And it could be several of the copper names, but you just want something that is involved with copper and something that moves when copper moves. And one of the benefits of having a name like FCX is that usually, for at least on the option side, they don't move a whole lot until they move. So a lot of times you get a lower implied volatility, and you can get some really good returns on these, as they move up from, whatever it is, 45 to 50, or, they can move up $5 or $10 over the course of a couple of weeks. And the options market doesn't really expect that. And so you can get some really good trend trades when something like that works. So I'll definitely be watching FCX and a couple other names. If something starts to act better than that name, I'll pivot to that, but that's definitely on watch.
Awesome. Now, I want to talk a little bit whether or not I'm crazy. And, I've been looking at this MSTR, and it just is giving me GME style vibes. And obviously, this whole thesis would void if Bitcoin pulls back. But it feels like it's building against Bitcoin pulling back. It feels like shorts are bent on the wrong side. It feels like Saylor's got, as Cody calls it, like an infinite money glitch going on here, where the higher it goes, he's just going to keep on raising and buying more and more Bitcoin, which will then send Bitcoin potentially higher. And it's just going to compound and perpetually squeeze into, wherever it goes. So, we've had weekends where we come back and Bitcoin's 5K higher. So are we a 5 or 10K swipe away from this potentially having some sort of gamma squeeze that goes crazy, goes into a circuit and does something like GME? I mean, is that something that's legitimately possible here? And what do you think the likelihood of that is if Bitcoin were to continue just to kind of either stay here or grind higher?
I definitely think it could have a move like that. And I think the options market would be part of it. But I honestly don't think that the options market is the main driver of this move. I think there's a good amount of short interest and it's just very thin. It trades so thinly. And if you look at, who are the big players up at these levels, not a whole lot of people are super long on this. Everyone's waiting for that SMCI backside move to happen. And so I think it's just a lot of people, shorts trying to hammer it in, soaks it back up. Then he announces more news, they buy more Bitcoin, and it is like that infinite money glitch for a while. And those things can definitely play out. So I think the options market will be a part of this one, but I think that the short interest and the news and the sector, those are equally as important things on this name. And I definitely could see this going much higher. One of the issues with MSTR is that it's such a volatile name and the options are very expensive that it's a very difficult name to trade cleanly. So if someone is trying to, trade it, I would just recommend using smaller than normal size because you're going to have higher than normal volatility. And so in order to actually keep your risk in check and to still have some, opportunity for reward, I would just adjust your size to really compensate for that. But I think that you're right on this. And it's one of these where I think a lot of people are also looking at, their market cap in relation to the amount of Bitcoin that they have. That doesn't make sense. But on the other hand, it's like if you can raise shares and use that premium to get it more,
Right.
It's like it's a whole mess of things happening right now. And those are the situations that end up breaking markets because you have people who are looking at 5 different variables, all different ways, and they all think that they're right. And that results in basically just thin liquidity, a lot of people on the wrong sides, and a lot of volatility. So it's
And
a
I think there's a
dangerous
lot
name.
of other things that are going on here too, where people are doing like ARB trades and they're short this, long Bitcoin or whatever, just because of the premium. And the same thing happened on GSOL, which is Solana. It's the same thing as the Bitcoin one. But just, I think it was trading, I want to say it was like 56x or something like that, some kind of crazy premium to the NAV. And then it flushed down, I don't know, 300 points before it bounced back up. But I do think that there's, some of those types of traders. But I agree. I was looking at the options and I was looking at the 2000s, 2500s. And I mean, they're like 30, 40, $50. Or if you go out a month, they're like $300. So like you said, if you're coming in here and trying to trade it, yes, options, not much volume. There was a 40x trade into the close on the zero dated on yesterday or on Friday. But I again, it's very, very thin tape, and you have to be looking for really like a $100-$200 move here. You can't be trying to, risk $10 because that sometimes that's half the spread. So agree with everything you said there. So all right, now I wanted to switch gears a little bit. We have another sale, and we're always trying to do, different things, include different things. So this time we're also including Tim Grattani's Trading Tickers DVD and an extra 2 months of IU. And so, one of the things, some people, if you get value out of Sunday Scan, this is probably about 5% of what we do. We have webinars, real-time trade ideas in the room, news, morning broadcasts, and a whole lot more. So I just wanted to kind of give you guys a softball question. But, at the same time, instead of hearing it from me, obviously Stan's the longest standing IU member from, pretty much day one. And then obviously, Chris, you've been here for quite some time and fortunate enough to meet you in Chicago and get you a little bit more involved in IU. But Stan, I'll send it to you first. But what is IU to you, and how do you find benefits?
Yeah, I mean, for me, Nate, honestly, at this point in my journey, IU has become a tool in itself for me to utilize during the day. not necessarily for alerts only or various concepts and strategy, but more so to utilize the tools that are built inside, and then really get an understanding of how the community thinks about certain tickers or certain moves. Look at the constant idea generation throughout the day, which is extremely valuable. And then as far as some specific tools, I like to really focus on high-low scanner of the day. I love the history of a particular ticker that we can pull up. I believe, that really speaks volume to what you can derive and expect out of a behavior of a stock based on how quickly you can pull up, hey, last time we did this, massive volume, where were we? How did we trade for the day? So for me, it is so much more than just a tool. Right, there's the community aspect, which I love, and generally I do not pay for any other subscriptions as far as trending or scanners, etc. I don't need that because it's a one-stop shop, really.
Awesome. What about you, Chris?
Yeah, I agree with everything that Stan said. And starting with the tools, and I don't think a lot of people realize how many tools that IU has. Like they've been built out. They're all custom. They're proprietary things that have been built out over the last couple of years, and you don't find those anywhere else. And so, like Stan was saying, you don't need 5 different services. This for news alerts, this for scanners, this for you have everything that you basically need on the tool side in Investors Underground. And that's a huge value that I get from it, just from the tech side. And it gets better every couple months. Something else comes out. We have AI scraping news from everything, and you get it 10, 15 seconds earlier than anywhere else. And when you're a breaking news trader, that's invaluable. So definitely the tech side, and then just having people who are all experts in their own niche, basically working together, sharing ideas. And so we might have different trading styles and focus on different things, but the people who are in the room can see all of that. And basically, as the market shifts, instead of having to figure it out on your own, you can be like, who's doing really well right now? What strategies are working? And then, we all have overlap in our trading styles too. And so we can all, when we're all agreeing on something, that's a great signal that something is, working. And when, something's not working, then you have other people to be like, hey, this is not the ideal thing. And to hear that from someone else instead of just you having to do it is a huge help. So the tech, the community, everyone's just cool and nice, willing to help each other. It's not like a me versus you environment. So if anyone's been trading solo or using different services, just really consider at least trying it and see what it's like, because it's been a huge game changer for my trading. And I think anyone who joins will get a lot of value out of it.
Awesome. Yeah, and that's the good part. Even like having Max, I feel like his whole thing is he's just watching traders and seeing what they say and like, how can I make that better? How can I make that easier? And that's why, there's nothing better than having, if you have a programmer, they do exactly what you tell them to do. But when you have a trader first, programmer second, or I guess he was a programmer first, but when he has that trader mentality, he's always thinking about like, all right, how do I automate this? How do I automate this? So that's been a huge thing. And like you said, Stan, there's just, with the tools, it's just about putting in front of you as fast as possible. So I do feel like the majority of people just think it's a chat room and, a Nate thing. But, again, with the amount of tools that we have, and we are going to be doing another price alert. I've got a really big idea, which I think will kind of change the way that scans work. And I want to have it so that members can also add their own. But that's going to be out in the near term. I'm still working on everything, but I'm excited to put that one out there. Just a good way to share, especially if, more of a macro trader and Chris lines up, some of the stuff that he's watching. And then, if I'm a similar trader to Stan and I want to be alerted to what's on his radar, I can do that. So next I wanted to kind of dive into, a lot of the feedback that I got last week was, they really liked me going through those charts, especially like the Rivian example. And then what's funny is the same trade that I went over on Rivian, literally to the same price happened on the very next day on that Monday. So I wanted to go over just a couple rapid ideas. I think I got like 6 or 7 of them written down. And the concept is just to throw the idea, the trade kind of concept out there with, you know, the name that I have on it, and just allow you to kind of see it. And if you have more questions, ask, and we can always, you know, re-hit it another week. Sometimes I like to kind of zone in on stuff and, you know, kind of go through it a little bit more deeply. But so Root, the first example, this one is very similar to SMCI and NVIDIA. So we talked about SMCI dividing it out by 10 or 100 to maybe make a little bit more sense. When you look at a stock that goes from 10 to 50, it seems like it's overextended. However, if you think about a stock going from maybe 1 to 3 on really, really good news up to 4, consolidates for 2 weeks, you're probably thinking that the next stage of that breakout is 5 to 7. But when we're looking at something that went from 10 to 50, it's hard to sort of imagine that. So in my eyes, this makes a lot of sense. And I'd be watching dips versus that 50 level for the event that for the potential of going 60, 70 or some sort of clear out move into those levels. SOUN, I want to go over. This was a beautiful trade, a beautiful opportunity. And it should look very familiar to every other A+ setup that we talked about. SMCI recently, where it starts to speed up, and then it ends up in a huge gap up type of situation. NVIDIA, same situation, up, gap up, blows out, fades. And then we also had that this week on SOUN, which should look extremely familiar. Easy looking left type of situation. Use the after hours sort of highs as a guide. It doesn't mean that it has to stop there, but it's a good first look for the potential of the exhaustion spot, and then failed follow through from there. So pretty clean, pretty big opportunity. And I think it's going to be a big opportunity this week as well. AISP, again, I am going through these fast. That's the point. If you guys have questions, continue to ask, use the comment section, and we can always, you know, kind of go back through them next week, maybe 1 or 2 of them. But AISP has been a nice liquidity trap example. You had the 217 million share day over here. From that point forward, you can see it's kind of got this underlying bidder, and you can almost just draw a line. You can see that they're holding this particular trend, right? And it's just kind of perpetually squeezing from this point forward. It is on the red show, and you know, it very easily could keep on going until it squeezes out the rest of the shorts. A couple other ones. Names with big history, right? BMR. Everybody remembers this day. It went crazy. Fades off, then starts to flatline. First day up, I'm interested because we know the stock's personality. Everybody else does too. So as soon as it starts to go again, people are getting excited. People want to participate in the move. Very, very clean breakout move. This was a nice long trade that I took on that first rip at 6. I made it actually pretty decently up into the 7s and sold the rest, I think, by 850 or 870s. So that was pretty nice. We had a couple. APM was a nice clear out move. You can kind of see, just go back a little bit right over here. And you can see this candle right here where it basically clears out that high day, which was around that 880 level, goes a few cents above. Everybody that had a stop at the high day gets blown out, sits right back. Then I start to get interested. We start to have a nice fade from there. We had the same situation on CXAI. And that was over here. So you can see that clear out move, tags that high day just above it. And then bam, same exact trade as APM. GXAI, this was the best stop of the week for me because it allowed me to get right back in there. Shorted into this move, covered, shorted over here, covered it, I think right around 12. Let it blow out, nice failed follow through, and then ended up riding it right back down into the offering. And then last couple, LSF, nice clean breakout move right over here. Plus knowing what time of day it is, 3:30s. So if shorts haven't covered yet, we've got that nice big squeeze into the close, which was which was really nice. And then a couple fails. This MINM, this was same sort of liquidity type of trap, and unfortunately overstayed on this trade. I was up a lot. I was in about 657. It was almost $10 after hours. I let some work, and it ended up coming right back down to the sixes. So they're not always going to work. And the key in this market is when they stop doing what you think, move on. Don't waste time. Don't waste time being wrong. Otherwise, you're going to miss out on other opportunities. So that was the rapid fire of the week. And see what you guys think about that, and see if you have any other questions. But any quick takes on your end, guys? Do you have anything that you think that was worth noting from the week?
Yeah, I mean, for me, Nate, I think like I mentioned earlier, and we just saw some of it on the chart examples. It's been very much a pop and drop during the intraday type of week on certain moves, and I mean, you can view that as perhaps the cleanup day. You can view that as perhaps now that we've turned that volume, could this be potentially setting up for a liquidity trap setup in the coming days and weeks? So it's good to note that action, because if you're a long trader and you take these moves, that is your exit essentially.
Yep.
If you don't lock any in, and if you keep waiting for more and relying on that black swan event, you're going to end up hurt over the long time. And same thing. So if you see the clear out, that's either your exit or your entry, because it makes sense given you're going to have an immediate resolution, as that's the type of cycle we're currently in for the intraday part. You've seen that with several tickers over
right here on HOLO. When you mentioned the cleanup move, this was the first one that came to mind, when they kind of position and ramp up, let all the shorts win, and then they make them pay the following day.
Right. Yeah, absolutely. Get whoever wants to sell, they sell, and then trap the shorts to give them the assistance for the next move higher.
Yep.
Yeah.
Awesome.
But that was pretty much it. My thoughts for the week. It's I'm going to keep an eye on that aspect, and use that to my advantage as we see new moves happening, until I'm proven right that they want to remain. There's nothing wrong with locking some in.
Awesome. And I really think all these names, you have to remember, when the SOUNs are up there, or the NVIDIAs are setting up and all that kind of stuff, you can't let these things take your focus. You got to, eyes on the prize. And it's so easy to want to trade the hot stock of the day. But when we're in a market, when these huge opportunities such as SOUN are setting up, you want to make sure that you stay focused on that, and not doing something else. You get on the wrong side, you spend a bunch of hours over here, and then you miss that trade that you've been preparing for 2 or 3 days, or even a couple weeks. So perfect. All right. What else? SOUN, and everybody says they're going to be at the NVIDIA this GPU conference. I feel like it's like WATT, W-A-T-T, and the chance that it's going to be in the next iPhone. I feel like we're living this again. But the good part about this is it's such a retail crowded name. Every now and then these things sneak up and they just start going crazy. Obviously, the options are a big piece of that as well. But as far as I know, they're not at the conference. But this has been the catalyst that kind of gave it that second leg. This has been the catalyst for NVIDIA that has continued to get dips soaked up. But what are you thinking for this week ahead, and the AI kind of theme and all that good stuff, Chris?
Yeah, I think that you have the NVIDIA conference, and there's a lot of hype kind of built into that. But I think that just in this market in general, I do notice it's starting to change a little bit. You're starting to see some separation from the names that actually have something going, and then you have some names that are just caught up in like a squeeze of some of the hype. But I think a good example, if you're able to pull up like Adobe, and so they had earnings recently, and we had talked about this maybe a month ago or something, where they were kind of the go-to for the more like video or the imagery, artificial intelligence, and they came out with earnings saying that there's more competition in that field now. Their forward guidance wasn't that great, and so you have this name that was seen as a really good way to play a certain aspect of AI. But now, it's like the proof is in the pudding. And as you have these companies, release earnings and it's not everything that you thought it would be, how many people were there expecting that? And when that doesn't happen, they're gone. And so I think it's a good time to start to notice which parts of the AI theme will continue and which parts are going to start dropping off. So that's definitely something that I'm focused on.
Awesome. And then any thoughts on like crypto and MSTR? You had mentioned things. At least in my mind, I see the more crypto goes, Bitcoin goes, I feel like the more funny money is in the market. Are you sharing the same thoughts, or do you have any thoughts there?
Yeah. So we've had big moves in the traditional crypto markets, with Bitcoin and Ethereum, things like that. But also, you just had a really big cycle with the altcoins, and so you have things like Solana that are going nuts, and that's probably
Crazy
the leader of that space. But you also have the meme coins, the altcoins, the 5 market cap that goes to 200 million market cap. And so I think that you have a lot of money sloshing around in parts of the crypto world, and they've kind of hung out there for the most part. So it's possible that if that starts to slow down, you could see some of that come back into the more speculative small caps. But it's also possible that it finds somewhere else to go. So it could find NFTs, or it could be a more risk-off environment after the Fed. And so I think that there's money out there and there's money looking for things, but I do feel that the market's changing up right now. And so I'm not exactly sure where the money's going to go, but I'm watching for kind of the shuffle, like what I call the shuffle, when basically what's been working, what's been trending, what's been happening. There's just a couple of changes. And so it's like you shuffle it all up and kind of see where things start to play out. So that's really what I'm focused on.
Yeah, I agree. And I feel like the more you try to predict certain things or have too big of an opinion on certain kind of themes, it just it ends up hurting. If you're trying to time Bitcoin at the right time, it's just you just got to show up right now. There's just so much stuff that's happening. I feel like showing up and seeing the action is probably the best move right now, and then just being aware of the themes and the sectors when they heat up is really the 2 big things that you need. The always trying to time the market for the day that it's going to unwind. I mean, it's just a waste of time. Mm-hmm. At least it has been for the last decade. But all right, I think that does it. We've got obviously we're going to have a busy week, and I'll just, as always, me, Stan, Chris. We're not financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. So we'll start with Stan. What do you got for the week ahead?
Sure. Let's see here. So we'll start with VERB, VERB. So, like I said, on Friday, I think if VERB would have firmed up into the 50-55s area, I think we might have had a different outcome. But again, you can't ignore the tape and how heavy it got after we broke sub 70s level there, 68, 70s. So for me, what I'll be watching on VERB is really, I want to see how we react to that offering news that we had after hours. I'll definitely know a little bit more on Monday morning, but a couple of things that I'm keeping in mind is if this 35 to 38 level keeps on absorbing and keeps on soaking, and then we start to see it inch back up. Don't forget we traded over 500 million shares on Friday. So if we start seeing some momentum build up towards 58, 60s, 70s, that could really trigger the next potential move. So I want to be aware of that aspect. But ideally for me, either trap sub lower, pre-market, and then have the move happen after the market opens, maybe some sort of an exhaustion move back to previous highs or even higher, and then look to trade that trend once it establishes or once it breaks, and then look to join in on the backside as well. But VERB was definitely going to be a interest of me, and it's going to be on top of watch there. And just like you're showing, Nate, yep, exactly what PHUN did. Once we created that market, they had 2-3 offerings, and that didn't kill it, and then it just kept on hanging on, and then eventually just fell off everyone's screen, and sure enough, that one day just gaps down 40%.
Exactly.
So VERB is definitely going to be a top watch for me again, just monitoring the levels that we were able to obtain from Friday and using that information for the coming week. But I don't want to miss that opportunity because a lot of volume went in there. So the next one that I have on watch is SOUN. And again, I'll literally monitor it for a day like we had on Thursday, where it sped up over the previous days. It finally gapped up, it expanded, and then once it failed, then look to capture that momentum on the backside. Unfortunately, I missed it last Thursday, but I'm not missing it this time around. So will definitely be a top watch. And also another great way to capture these is just as we touched earlier. Oftentimes I just set price alerts at certain key levels. And then I don't worry about it, because if I have it constantly on the chart, then I may start making up stories, and then before I know it, I'm involved in the trade.
And you have those price alerts for a reason, because there's a purpose for that, and it's because it's either above it is gonna potentially squeeze out, or below it it's gonna be heavy. And you want to wait for that because you want to be on the same side as sellers. You don't want to be anticipating it, especially in this sort of market.
Right. Absolutely. Yeah. And it just, having those is really, really great. So we'll look for another day like we had on Thursday. And the last one that I have on watch, and literally that one is just watching CVNA, back to the discussion that we had with Chris on these videos over the last couple of weeks. Right now, we're just stuck in this $10 channel of 75, 85 or so range. And for me, what I'd like to see is just really, watch within this $8 to $10 channel, see how the digestion of the move is going, because as you can see, we gapped up there late February, and now we're just digesting that move via time, going sideways for a little bit. So for me, a trade comes in once we break out of these one of these lines, either sub 75s and then it stays heavy, or 83, 85 and over, and then look for the next opportunity there. And that pretty much wraps up my top watches for next week.
Awesome. What about you, Chris?
Yeah, and while you have CVNA up there, I totally agree with Stan. And I think we've laid out the thesis of kind of just this slow build, eventually ending up in a capitulation, to the top side. But like I mentioned, with the market changing, what I've seen is that some of the option activity has not been quite as bullish as it was before. So there's still some, 85 calls, 90 calls, up to 100, but they're not of size anymore. And so that tells me that, if there was a fund, or if there was something that was initially planning a big move, it might have backed off a little bit. And so when you have a big channel like that forming, I'm open to either scenario where, if things start to perk back up, market gets hot again, we could easily, have the original thesis play out. But if you have this consolidation, and the longer it stays up there, the more people are kind of anticipating the breakout. If the market cycle starts to turn down, or if this starts to get below that 75 or get below 70, then look out below, because again, the reason why this was up is because 3 or 4 things all lined up on it. And if those 3 things or those 4 things start to kind of slowly, one by one, fall off, then again, this has no reason to be up there. So that's
we also kind of talked about the cheat sheet. We talked about the cheat sheet on SPY, and if the SPY continues to melt up, so should CVNA. So that also kind of lines up with maybe why some, they're not going crazy with, options way out of the money anymore.
Yeah. And this is an example. This could potentially become an example if this fails, as like a long range kind of failed follow through setup where, you have this channel, it couldn't break out of the top side, but it does break down under the bottom side. So it's just something to keep on watch. I'm open to either scenario.
Almost something like that too.
Exactly like that. Yeah, and those can be good trends to trade with puts for longer duration things. But other than CVNA, I do have ADBE on watch this week. And so again, we had earnings, and so that shifted it to being a kind of a great name for the AI theme to now not so much anymore. So again, a lot of the trading that I try to do, it's like the path of least resistance, because I trade a lot of trends. And so I want things that if it there was a change in it, and now it's starting to act perpetually heavy. It has negative things going, and it starts to act like that. Those are the things that I like to trend. So as it pops up and fails to follow through to a prior level, I might get puts for the next week or 2 weeks out and see if it just agrees and keeps acting, because many times these things will trend for weeks or months at a time. And that brings me to Tesla, which is the same thought process of just, rates still going up. You have a lot of important things, but I mean, look at the downtrend in that of you just have, fail after fail after fail, then consolidation, then fail. So if you can catch, a good week or two when this is going down, you can catch huge moves. And so that's what I'll be looking for until this results in likely some kind of capitulation, maybe into the 150, or I mean, if the market gets bad, maybe 125, maybe 100, not base case, but you have to be open to kind of more extreme scenarios if the market turns. And then other than that, I'm watching FCX, and that's again kind of a path of least resistance trend on the upside. And so if copper keeps breaking out, if the market stays strong, and if this is trending well, then this could be a name to get calls on, slightly out of the money for a week or 2 weeks, or even up to a month if you think that a big move is coming. So I would say that those are the three things, or those are the couple of things that I'm really watching this week.
And you had mentioned on the calls on FCX, stuff like this is not something that has, crazy premium. So if you were buying, say, the 45s, they might only be sort of a nickel. And once they go in the money, it starts to accelerate pretty quickly. Is that correct?
Yeah, that's correct. And those are some of my best trades, is when you have a new theme forming, but the IV of the options doesn't reflect that yet. And so if you can get something a couple of weeks out, I've done this with crypto in the past. I've done this with a couple other sectors. And if you can get a move right, the direction right, and time it right, you can get some really good moves with that. So again, I'm open to either scenario. We have a lot of things going on this week, but that's definitely something that's a top watch for trending higher.
Perfect. So like Stan, I've got SOUN on watch, and I really think that you just need to have NVIDIA up with it as well. They are kind of, working hand in hand. As far as, when it's strong, so is SOUN. When it pulls back, so is SOUN. So we'll see what happens. I think it's the 17th to the 21st, maybe the 22nd. So I don't know when the presentations are and all that stuff, but obviously there'll be a little bit of a tug of war. But I am very focused on any big gap day, any big parabolic move. I think, this is a great kind of example to see sort of the same kind of clear out move right here, right before close on Friday. We had that nice, probably burn a bunch of call sellers, maybe covering into that or something like that. I don't know what the correct term would be for that, but clear out move, and then just absolutely came in. So I'd be looking for moves like this in the week ahead. NVIDIA had some good option action last week, so I think that's going to be a focus for me. SOUN, obviously, with that, any kind of reactive trades. And then this VERE is pretty impressive. I wasn't expecting to see it come back as well as it did, but this is a great example of exactly what Stan was saying with HOLO, and when I had pulled that up, as far as like sort of that cleanup day, right? So on Wednesday, we had that huge move, nice clear out over 3, and then it just sat back. And it was like, all right, that was wasteful. It just ramped up, came right back down. Next day, it goes again, peaks out, and then guess what? They make everybody pay. So, and you can kind of see that on this intraday chart where, it kind of ramped up on air, comes back. So if you were price sensitive, if you chased it up, whatever, you probably exited. Next day, you're like, all right, I knew it. I should have sold, came back down, bail out. And all of a sudden, it's just that slow, steady squeeze. So we may have another day or two, but I do want to focus just in case this gets out of hand. If it does do something in the 4 to 5 plus range, blows out, I think we'll have a really, really nice unwind after that squeeze is done. So that's it for me. I do always have, obviously, more watches. I just try to condense it instead of going over a million watches. Just pick our top 3. I will post the winners of the T-shirts in the scan. As always, leave a key takeaway. What did you like about scan, and what was something that maybe you took as an aha moment? But other than that, have a good weekend, guys, and I appreciate you adding some value.
Absolutely. Thanks for having us again.
Yeah.
And once again, don't forget, we have the sale going on. The link will be in the description. You can check it out. IU is more than just a chat room. There's a lot of great tools, a lot of new things that are coming out literally every single day. So I hope to see you guys in there. And otherwise, we'll see everybody else in the room on Monday.
Sounds good.
See you guys.
Have a good day.